Hello and welcome back. Francois Savary, hello.
Hello, Mark.
Thank you for joining us. Trump tariffs. Markets are not loving it, but the IRS must be happy. On current trade activity, they will raise an extra $600 billion in revenue. So what are markets worried about? How do you think it will affect growth?
Negatively, that's for sure. And at the end of the day, the only result of such a tariff attack by the United States is that the economic activity is going to slow down. The big question for investor is, are we going to see a slowdown or are we going to see a recession? What the market is pricing now is a recession. And you have many banks that came out with forecasts now that you have to expect that GDP in the US in the fourth quarter of 2025 is going to be negative. So it tells you a lot about the negative impact on economic activity. But, and this is a big but, you need to keep in mind that beyond such projection, you have an hypothesis, is that there is no negotiation coming. If the US go for full speed, no negotiation, if there is retaliation by other countries, you can be quite sure that you will have a significant impact on economic activity.
So if the first question about growth was a simple one, it gets more complicated from here. What is the effect on inflation?
Okay, short-term inflation, whatever the case you build, there is partial action by the company to take on their margin the increase in tariff, or they do not do it. There will be some inflationary shock in the short term. You have an increase in inflation looming in the US. We all know that the US is still facing condition where to bring back the inflation rate towards 2% was very difficult. It's going to be even more difficult to do so because it's going to add, you have some estimates about 1.8%, the highest I saw 1.8% more inflation in the very short term. That's the beginning. But then, as we all know, if there is more inflation, there is less purchasing power for the consumer. And that can feed into a slowing growth again, because there is some dynamic in this process. So first, you have more inflation. Second, you have a fall in consumption, a fall in investment, because the prices got higher. And then you have a longer period of very low growth in the US in the medium term.
Surely the traditional way of dealing with that is the US dollar going down substantially. Why isn't that being done in this case?
Okay, there is a theory, and in the theory of imposition of tariff, you need to read the article by Mr. Stephen Miran, and he's one of the main advisors of Mr. Trump. He decided, or he bring forwards the fact that using tariff is supposedly in the very short term very supportive for the US dollar. And this is absolutely not what is happening. So when you look at what is happening currently, you have tariff increased, more cost for the US consumer, and you have a weaker dollar. This is something that is very negative for the inflation development in the very short term. And this is not what they were expecting. This administration was expecting that the US dollar would strengthen because it would reduce the impact of the tariff this way. This is not what is happening. You are right in general. The big question, and you have some commentators who are telling everybody that at the end of the day, the only thing the US want is to negotiate on the strength of the US dollar. They want to use the tariff, they want to use trade as a way to bring other countries to negotiate and to support an agreement to weaken the dollar in the medium term. But that's something that is very difficult. Look at the reaction by China on Friday. They decide to increase tariff by 34%. So it's telling you that to create a consensus or a compromise between the main partners to depreciate the US dollar is not going to be an easy task for the administration.
Your target for the US dollar, your target was about 111, I think, adjusted. Have you changed your opinion on how low the US dollar can go?
I have changed my opinion during the months of March, early April. We have raised the target to 115. We consider that this tariff and the fact that economic activity is going to suffer quite a lot is going to be quite negative for the US dollar. We have 115, which is a moderate depreciation from the current level we are. Nevertheless, it's very interesting that you have some turnaround, significant turnaround in some big companies in the US, big banking company coming out with some complete change in forecast for the US dollar in the next 12 months. Now they went from at the end of the year being 105. Now they have a target of 120. And it's a significant turnaround. It tells you a lot about the fact that many bankers, investment bankers, were absolutely not prepared to see such a big threat to economic activity in the US through the tariffs.
To what extent would a potentially weaker dollar into the future affect the US government, the US Treasury's chance of raising more money at decent interest rates?
You know, you need to be aware that many investors, international investors who were invested in the US in the course of the last 24 months, they are making significant loss lately. Not only because the equity market is coming down, but because the US dollar is weaker. The fact that the US dollar is weaker is making more difficult for the US economy and US state to bring some capital inflow to support the financing of the budget deficit. This is a key issue. At the end of the day, the real issue for the US economy is that it has been unable to manage the huge fiscal deficit that they have developed in the course of the last few years. Now we are at 7%. Imagine what is going to happen with a slowdown. It could go as high as 10%. It means that you need to find money to finance this budget deficit. Never forget that a quarter of the total US debt is owned by foreigners. So it means they need the support of foreigners to finance the budget deficit. I come back to a point that you mentioned at the beginning of this show, where the IRS should be happy. Yes, they should be happy if they are able to bring those 600 billion US dollar in taxes. But don't forget that with lowering activity, it's not going to be 600,000. Don't forget that if Mr. Trump goes for his new tax cut by the middle of this year, it's going to cost 4.6 trillion US dollar in the next 10 years in terms of financing. So it's a lot of money that is at stake. It's a lot of pressure for foreign investors, and they need to reassess their will to hold US dollar debt. I don't think that there is a one-way bet on the US bond market. I think that people need to be careful with the bond market. There were a lot of investors who decide that we go into bonds because this is a safe haven in the current condition. But again, you know, those people need to read the article of Mr. Miran. Mr. Miran is very clear. At one point, the US is ready to modify the debt of the United States in such a way that they limit the ability of foreigners to receive a coupon on their debt. And they would be inclined, Mr. Miran would be inclined, this is a proposal that he has, if the other country do not want to negotiate anything, unilaterally, they would have to go for the modification of the current terms of some debts with a maturity and a certain coupon to extend the maturity to 100 years and to make zero coupon.
Do you believe in a steepening of the yield curve?
I think that if the inflationary pressures are coming the way I'm expecting them to come live, it means that there is a need for a steeper yield curve down the road. Yes, it means that the long-term maturities or medium to long-term maturities have to integrate the fact that the US is taking the risk of higher inflation, and that needs to be in the long-term bonds yield that they offer currently.
The Nasdaq Composite is down 22%, bear market territory, as we said earlier on. Are you seeing value in some stocks?
You know, we came from a situation where we had solid earning growth prospect, high valuation. What I know for sure is that with this uncertainty, this is a major blow to the valuation of the US equity market. You can no more justify that the market is valued 23 times, 22 times, 21 times earnings. There is something that we need to have in mind, and it's going to stay. Yes, there is some value. You know, when I see some stocks going down the way they did without any other reason that because there is such a fear in the market, everybody is selling. I think that there is some value, and you need to look at those companies in the medium term. Do I want to consider that there is a buy the dip right now? No, I don't consider for the time being that there is a buy the dip right now. We need to have a phase on the US equity market of stabilization, and you need to have this stabilization in order for the market to be able to recuperate, to recover in the medium term. It's too early to buy. It's too early to try to chase the market. It's too early, to my point of view.
Ursula von der Leyen has announced previously, whether or not she's changed her mind yet or not, that she would reciprocate in terms of tariffs. And they haven't announced anything yet. We're not sure if they're going to make any announcement this week or next week. Are you expecting the same kind of reaction from the markets if there is an announcement from the European leaders?
It depends because, the Europeans are getting very cautious, and they are right to be cautious. There is no point in trying in the very short term to bring decision to really make things even worse. Nevertheless, I think that they need to have a very strong position. It seems that there is a position that is emerging that the Europeans need to focus their action on the service part of the trade between the US and Europe, because on that part, the US have a huge surplus versus Europe. It means that there are some things looming concerning the GAFAM, and there could be some action on the tax rate that is applied to the big tech companies in the US. So I think that they will come with a solution, with a proposal. I think that it will be a strong one, but it will be something that will bring the US to negotiate with Europe.
Lastly, coming to gold and silver. Silver down 7.5% and gold down 2.5% on Friday. It's been suggested that this was taking profits in the assets that had remained strong in order to pay for losses in the stock markets. What are your thoughts on the move in gold and silver? Were you expecting that?
Okay, it's very interesting the number you mentioned. Usually the silver play is a multiple of the gold play. So the fact that it went down 7.5% while gold is down 2.5% is exactly going into that direction. Usually silver is more speculative, if you want. There is some profit taking because the only asset that has been able to produce a significant return since the beginning of the year. So I think gold suffered some profit taking. There is also another element. Don't forget that for quite a few months now, there were rumors that that the US would impose a tariff on gold imports in the US. That has supported the price of gold in the course of the last few months. What is interesting about the Liberation Day is that at the end of the day, there is no tariff imposed on gold. So I think that this is also one of the reasons why the gold price has been down lately. It's because suddenly people realize that the US administration is not going to impose tariff on gold, so it reduced the demand on that side. Nevertheless, I still believe that gold price is going to move higher because with higher inflation, with slower economic activity, with this kind of uncertainty, I don't think that the trend on gold price has inverse and that you should fear that it's going to go down. I have changed in the course of the last 10 days, yes, to 3,200, but that's the only adjustment I have made. I am not in the camp of those who are thinking that it can go to 3,500 in a very limited period of time.
Francois, thank you very much indeed. It's very kind of you to speak to you next Monday.
Okay, you have a good week.
You too. Bye-bye.
Bye-bye.